नमस्कार दोस्तों, स्वागत है आपका द एन शो में। और आज हम लोग एक बहुत ही स्पेशल गेस्ट के साथ बहुत ही स्पेशल चर्चा करने वाले हैं गोल्ड, सिल्वर और मैक्रो पिक्चर पे। क्योंकि हमने देखा कि पिछले कुछ दिनों में मैक्रो पिक्चर में भी बहुत बड़े चेंजेस आए हैं और ऑलरेडी आफ्टर ट्रम्प इट इज कंटिन्यूअस। और इसके साथ ही गोल्ड सिल्वर में हमने देखा कि बहुत शार्प मूवमेंट हमने देखा पिछले एक 10-15 दिन के अंदर। तो one time we have seen the 5600 gold and then below 5000. So these are the things we have to discuss today, and my special guest is Mr. N Sharmugmanatham, who is the very prominent economist, I say, because he has studied in IIT BHU, then he did his masters from IIM Lucknow and worked 10-15 years in Infosys in different countries. So he have a very good exposure in the global market, global economies and global societies also. तो इनको प्यार से हम लोग शान कहते हैं। तो शान सर का जो अथॉरिटी है वो खास तौर पे मैक्रो और कमोडिटीज पे बहुत ज्यादा है। तो मैंने सोचा कि इससे बेहतर कुछ नहीं हो सकता कि हम अपने दर्शकों को, लोगों को ये समझाएं कि जो चीजें बदल रही, जो पिक्चर बदल रही मैक्रो, उसको कैसे समझें, और स्पेशली गोल्ड और सिल्वर में। तो शान सर, बहुत बहुत स्वागत है आपका और बहुत शुक्रिया मेरे साथ जुड़ने के लिए। और शान सर का एक परिचय और है कि एक बहुत ही शानदार किताब लिखी है शान सर ने, जिसका नाम है R.I.P U.S.D 1971-2030। बिकॉज 20 के आगे जो X लिखा है वो 10 मानिए आप, तो 2030, राइट सर? 2030
That is correct, Neeraj ji. Yes. Good morning to all your viewers.
जी। तो ये जो बुक है ये बहुत ही इंपॉर्टेंट बुक है, क्योंकि जो डॉलर डिबेसमेंट, डी डॉलराइजेशन की थ्योरी चल रही है उसको भी ये कवर करती है। तो विदाउट टेकिंग सो मच ऑफ टाइम, शान सर, फर्स्ट यू एक्सप्लेन मी अबाउट योरसेल्फ एंड अबाउट दिस बुक।
Yes, good morning to all your viewers once again. I worked in Infosys for about 10 years as part of the US and Europe operations, and I was a software engineer. And that's when I actually picked up an interest in finance and economics, and I kind of self-taught myself economics, and that's how I kind of became an investor and economist. The book I wrote, R.I.P U.S.D 1971-2002X. What I'm saying through this book, or the title, is that the dollar has actually existed for 250 years plus now. But the dollar that has existed from 1971 onwards, it is a very different dollar compared to the dollar that existed before. The dollar that existed before 1971, that is, was convertible to gold at a fixed exchange rate. Say, for example, between 1789 up till 1933, that is for about 150 years, the dollar to gold had a fixed convertible ratio of 20:1, which is that you could take a $20 bill, go to a bank, and across the counter exchange it for an ounce of gold. From 1933 till 1971, this ratio was 35:1. Now, what this implied is that the bank or the Federal Reserve, as the case may be, before they can issue a dollar bill, they needed to keep an equivalent ounce of gold in their reserves, because the dollar to gold was freely exchangeable. Now, this convertibility was closed in 1971, and the dollar that has existed after that, it is a free floating abstraction. It is not backed by anything, and the Federal Reserve can print as much as they want. So that is the dollar that has existed till 1971. And what I'm saying is this particular dollar is in its very last legs. In the next few years, 2, 3, 4, 5 years, as could be the case, the dollar will be, or the US will be forced to go back on some form of a gold standard. Now, as and when I say gold standard, there have been 2 or 3 different versions of the gold standard. Historically, the best standard has been the classical gold standard. Okay, but the gold standard that existed in 1971, that was called the US Gold Exchange Standard. Still a gold standard, nevertheless. Now the US will be forced to go back to some form of a gold standard, and they can go back to the gold standard only at a price of at least $24,000 an ounce. That is the basic thesis of the book. And I wrote this book in 2024, and it was published in June 2024. Now, at that time, the price of gold had just touched 2,000. And as and when I published the book, the price was 2,200. That was an all-time high at that particular point in time. Gold had never touched 2,200 up till then. Now, the forecast of the book was over the subsequent 5 years, gold is going to at least $24,000 an ounce. That seemed like an outrageous forecast at that particular point in time. But events that have played out after that have largely been along the tracks of what I have described in the book. And at this point, I'll feel confident enough to say that it will go to at least $24,000 an ounce, perhaps even much, much higher than that. And we will look into the reasons today. Okay, now the one thing I don't want listeners to do is to listen to this podcast and go and take a futures positions like in long and silver market. Please don't do that. That is not meant for the average investor. That is meant for the really sophisticated like investor. The best way to play it is to just hold the physical bullion, but just do a buy and hold strategy. For sophisticated like investors, you could actually buy gold and silver mining stocks or the mutual funds that invest in these specific companies. Don't get into the futures game. That is not a game that is meant for the average investor. Okay, that is a caveat that I want to mention because I've seen too many people losing money because of that particular activity that they indulge in. Okay, now as part of the book, I had made a series of forecasts, six specific forecasts I had made. Okay, the first one, and all six are listed in this particular slide. The first forecast was about the gold price itself, and it said that gold price is going to at least $24,000 an ounce, and perhaps even well beyond that. Now, how did I reach this particular number, $24,000 an ounce? It is not a number that I pulled out of thin air. It is that if the US wants to go back to a gold standard, they have to back their supply of money. Okay, you can take M0, M1, M2, M3, and back it up with the gold that they are holding as part of the federal, as part of Fort Knox, which is about 8,100 tons. Now, if you do the numbers, you will get a number of at least $24,000 an ounce, and that is depending on whether you choose to actually back M0 or M1 or M2 or the percentage backing. So you will get a range starting at least $24,000, okay, going to perhaps even $100,000 an ounce. So that is how you get this number. And the US government will have no choice to do it because before the US gets into it, some other country will get into a gold standard, at which point the US will have no choice but to go back to the gold standard that it had. Now, the second forecast that I made was about the US stocks, and it specifically stated Dow in this, and I've said that the Dow to gold ratio, and this ratio was 16.8 at that particular point in time. This is going to decline substantially, and this ratio will go down to as low as 1 or 2 over the next 5 years. That was the second forecast I had made, and it's important for the viewers to understand as to why I'm using this ratio. Say, for example, if you take the NSE, okay, we are trading at about 25,000 today. If you go back about 10 years in time, it was about 8,000 or something like that. Now, as in when we say these numbers, 8,000, 25,000, okay, we are saying it's 8,000 rupees. Now, the rupee that was there in 2015, it is not the same rupee that is there today because the rupee itself has got substantial purchasing power over the 10-year period. So although the index itself has given approximately a 15% compounded annual return, if you adjust it for the price inflation, it is something much, much lower. So how do you adjust it for the price inflation? The best way to adjust it is to use the price of gold. Gold has historically served the purpose of money, and when you adjust the value for something in terms of ounces of gold, then you get the real appreciation that they have had. So all I'm saying is this Dow, that is 16.8 ounces of gold. When you measure it in terms of ounce of gold, you're going to lose more than 95% of the purchasing power over the next 5 years. Okay, so now over the last 2 years since a book has been published, it has come down from 16.8 to less than 10 today, and over the next 3 or 4 or 5 years, it is going to go down. It is going to lose another 80-90%. Okay, that is the forecast I made on the stocks. The third forecast was that I made was on the US housing bubble itself. Now, all of you will recall that in 2008 there was a US housing bubble that caused a GFC, global financial crisis, as we call it as today. Now, if you plot the chart of US housing prices, say from 2000 to 2025, 2008 housing prices will look like a small blip today. The housing prices today are substantially bigger, and even when you account for the increased incomes and increased population, the bubble today is much, much bigger than the bubble that crossed the 2008 GFC. So as in when this bubble crashes, you are going to have a decline in housing prices that is much higher than the 40% decline that we had in 2008. That was the third forecast I had made. Now, stocks and housing, these are claims on real wealth, right? Say, for example, equity, it is a partial ownership of a company. The company will have land, assets, etc. And houses, okay, you still have some land or a building that you have a claim on, right? But if you take bonds, it is a claim on a piece of paper. It's absolutely nothing more than that. And especially if you take a long-term bonds, 10-year, 30-year bonds, you are going to lose almost 100% of your wealth if you keep it in long-term bonds. This is a guaranteed outcome. And as my mentor Doug Casey says, bonds today guarantee returns free risk. There's no possibility of getting any return, and you're possibly going to lose 99% of your principal as well if you keep it in long-term bonds. So bonds is one asset category that you need to get out of. Don't bother about the tenure, the maturity, who is issuing it, doesn't matter. Bonds are a gigantic bubble at this point in time. And if you see the long-term bonds in the US, these have already lost substantial value, maybe close to 30-40% in the last 2-3 years. But you're still going to lose another 95% of the value if you stay in bonds. So bonds is one category that you need to absolutely move yourself out of. The fourth one is about, sure.
Before you go to red shoots, we want to understand again these things. You are saying 24,000 per ounce gold, even higher in the next 5-7 years. Second, you are saying that bonds will lose its value. It's just a piece of paper. And the third of them was saying housing market is also showing the same signs as it was in 2008 when great GFC happened. Correct. My question is it because the debt to GDP ratio of US has blown up to 130%, and we have seen currency life had been 130 years or 100 years, then it will not remain the dominant currency of the world. We have seen so many currencies happen to that. So these two factors, and also the enormous liquidity throughout the world, if you calculate the M2 money, it will be more than $6-8 trillion as of now. So these are the basic facts you are relying on?
Absolutely. Whenever you actually hear the word liquidity, okay, substitute it with monetary inflation. That is the correct phrase, right? Mm-hmm. Now, inflation refers to an increase in the supply of money. Okay, that was what the history of actual meaning of inflation was. Even if you take a Webster's dictionary, as late as just maybe 30 years old, the word inflation literally meant an increase in the supply of money. That is all inflation was, right? The root of the word inflation is to inflate, right? Now, when you talk about prices, we don't say prices inflate. We say prices increase, prices goes up, comes down. But what inflates is a supply of money, right? So inflation is an increase in the supply of money. A result or a consequence of this inflation is that prices of goods and services go up. So to distinguish between the cause and effect, I talk about monetary inflation as a cause and the price inflation as a consequence. Now, as soon as you understand the cause and the consequence, it is very obvious as to who causes the inflation. It is only central banks, because only they can actually create the supply of money. So the only reason why your price is going up is that central banks are printing too much money. Now, you made a very important point about the debt. Now, if you look at the debt in the US, it started from 1789. If you look at the national debt, right, to reach the first trillion, they took almost 200 years, right? Now, we add a trillion every 150 days or something less than that, right? So that is because the US moved out of a gold standard. When they were on the gold standard, the Federal Reserve was not free to print the currency. And the government was forced to live within its means, which is to state that they had to balance a budget. Now, after 1971, which is when they moved out of the gold standard, not a single year did the US government have a balanced budget, not once. And before that, for 200 years, almost every year, excepting for the 10 years of the World War, they almost always had a balanced budget. And after they moved out of the gold standard, not 1 year did they have a balanced budget. So that shows you that this gold standard is a restraining force on the government. And as soon as you lift it, a government is free to print and spend whatever it wants. And that's what they've been doing. Now, if you look at the national debt of the US, that is close to $40 trillion today. That is a gigantic number if you think about it, because the total revenues of the Federal Reserve of the US government is about $5 trillion. So you have 8 times the debt, especially when they're running a deficit of something like $2.5 trillion every year. So that keeps getting added to the national debt. right? Now, on top of this national debt of about $40 trillion, you have unfunded liabilities, which is the money that the US government owes to its citizen in the form of their pensions and medical. This is money that they have collected from their citizen in return or a promise of services in the future, but they have not set this money aside. So this unfunded liabilities, as it is called as, it is $200 trillion. So there is no way the US government is going to pay back this money, but instead of defaulting outright, they would just print this money and hand it over, or they would inflate the currency to give this $240 trillion back, in which case the money will lose a substantial portion of this purchasing power. And that is a basic thesis stating that the dollar is going to get inflated out of existence, and hence gold prices will go substantially higher. Yes, Neeraj, have I answered your question?
Yes, perfectly.
Yes.
Now you come to the fifth point, when you see the red shoots.
Red shoots. So I am basically talking about the US economy, and I'm saying it is going to get into an inflationary depression. Now, people need to understand this very clearly. Depression is a heightened form of a recession. It is a period in which you have a huge contraction in the economy, upwards of 10% of GDP, as I have defined it as. Now, people, especially economists, confuse the depression with falling prices. That is not the case at all. The 1930s depression happened to be deflationary. Prices fell because they were on the gold standard. That was not the cause of the depression. Now, in this case, you are going to have an inflationary depression or even a hyperinflationary depression, which is that the economy is going to contract big time and you are going to have prices go up. Now, normally what happens is when you have a recession, prices tend to fall. Okay, so the central bank can actually cut rates. But in this case, they can't cut rates because inflation or price inflation is going to be very high and the economy is also going to contract. This is a situation very similar to what the US faced in the 1970s, wherein they had price inflation of 13, 14, 15%, and they also had a recession, right? But at that time, Paul Volcker, he actually put the interest rate at 22% in the US to actually contain the inflation and bring stability to the US dollar. Now, that option is not possible today because of the levels of debt. In the 1970s, the amount of debt in the system was very low, maybe less than $3 or $4 trillion. But at this point in time, you're talking about 10 times that particular number. So there is no way the Federal Reserve can actually increase the interest rates to contain price inflation and bring stability to the dollar. The US Fed will inflate the dollar, and hence gold prices will go much higher. So if you look at the effect on the dollar, which is the Dixie index, DXY, it is going to lose at least 50% of its purchasing power against the other major basket of currencies. That's what I put. Price inflation, I'm saying it's going to be in double digits. The 30-year interest rates, that's also going to be easily into double digits. What the Federal Reserve controls is the short term. Okay, they can keep the short term rates at 0% if they want. They don't control the 30-year rates, and that is going to be in double digits. And if you look at the GDP cumulative contraction, that is also going to be well into double digits, much, much higher than 10%, if you ask me. So these are the signs that is going to happen, and we have started seeing the signs of it earlier. All the things that Trump is doing, tariffs and the wars and Greenland, these are signs to shift the focus away from the local economy. Okay, that is contracting in a big way, right? And the last forecast that has not yet played out is on Bitcoin itself. Bitcoin, I'm saying it's going to lose a substantial portion of its price. Bitcoin doesn't have value to lose. It's going to lose a substantial portion of its price, and is going to go to very close to zero. So as and when I published the book, it was 69,000. At this point, it's about 78,000. But you should also remember that about a year back, the price of Bitcoin was about 120,000, and it's lost about 1/3 of its value. It's going to lose another 80-90% of the value, like in the next few years, and it'll go very close to zero. So these are the specific forecasts that I have made in the book, and expect all these to play out over the next few years.
Right, Shan sir. So let me summarize in Hindi for our viewers. इस ग्राफिक पे स्प्रेड में लिखा हुआ है कि गोल्ड के प्राइसेस $24,000 या उससे भी कहीं ज्यादा वेरी सून जा सकते हैं 3-4 इयर्स में. उसके रीजंस ये है कि पूरी दुनिया की जो बड़ी इकोनॉमीज हैं, स्पेशली इन यूएस, इन्फ्लेशन प्रोड्यूस किया जा रहा है करेंसी प्रिंट कर करके, क्योंकि उसकी पैगिंग नहीं है किसी चीज से, किसी गोल्ड से या किसी भी चीज से, तो उसका कोई कंटेनमेंट नहीं है. जितनी करेंसी आप प्रिंट करेंगे उतनी ज्यादा उसकी वैल्यू गिरेगी, और जब वैल्यू गिरेगी तो इन्फ्लेशन बढ़ेगा. तो एक्चुअली आपकी परचेजिंग पावर बहुत तेजी से नीचे गिरती है. वो $1 की वैल्यू आपकी वो नहीं रहती जो 1 साल पहले थी या 1 महीने पहले थी. इसकी वजह से इन्फ्लेशनरी सिस्टम आएगा। तो देयर इज नो अदर वे टू कंटेन दैट कि आप इंटरेस्ट रेट बढ़ाएं जिससे मनी सप्लाई गिरे और मनी की वैल्यू बढ़े। लेकिन जब आप मनी सप्लाई बढ़ाते हैं तो आपने ऑलरेडी इतनी इन्फ्लेट कर रखी इकोनॉमी को कि वो बहुत भयानक कॉन्ट्रैक्शन में जाएगी। अगेन फिर बात वहीं पे आ गई कि आप एसेट्स की ओर जाएंगे और रियल मनी जो है गोल्ड एंड सिल्वर एंड अदर एसेट्स, फिर आप रियल मनी की तरफ, पोजीशन की तरफ जाते हैं, जो कि इस समय वर्ल्ड में हो रहा है कि पूरी दुनिया में रियल एसेट्स को कैप्चर करने के लिए लड़ाई झगड़े टैरिफ सब कुछ इन प्लेस है। तो ये इसका है। अब सर एक चीज मुझे और समझाइए, टेल मी वन थिंग मोर, इज देयर एनी वे आउट फॉर यूएस टू capture or manage or save themselves without much inflation, much creating inflation or going back to gold and silver?
Okay, there are two parts to this question that you've asked, Neeraj. The first is there a way actually for them to balance the economy? It's possible, right? If you look at Argentina, they had actually like elected a president, Javier Milei, about 2 years back. 60 years before that, it was under communist rule, and the currency had actually collapsed something like 8 to 10 times in that 60-year period. It was 60 years of communist rule that completely destroyed the actually the country as well as the currency. And the people of Argentina had the sense to actually elect Javier Milei as a president, and he came in, and within 1 year he just balanced a budget. He just cut the spendings of the government left, right, and center, and he balanced the budget. When he took over as a president, they had a month-on-month inflation of 30%, and within 1 year he got it down to single digits on an annualized basis. That is the extent of change. But you should remember that Javier Milei, he was a professor of economics, and more specifically like a professor of Austrian economics. He actually understands money, currency, free markets, and all these principles very well. So he didn't need an economic advisor to tell him as to what the correct thing to do is. He knew what to do, and he did it exactly. Now, if the US can actually elect some president who understands Austrian economics, and there are a number of people in the US Senate also at this particular point in time who do it, then they can do it. They have to balance a budget. There is no other way out for it. If they balance a budget, okay, then they can solve this issue. But it's not easy for the US to balance a budget simply because they run a democratic system, and more than 99% of the people don't understand this, right? If you go and tell them, well, look, we have promised you pension, but we can't give it to you because we don't have the money. Okay, you will have an uprising in the US. So it is extremely difficult to do it in the US. And the second part of your question was on the gold standard. Now, the gold standard, it is good to go back on a gold standard because it automatically brings a discipline on the politicians. Now, when you don't have a gold standard, everybody will have an incentive to print and spend what they want. It actually feels good to give out money, right? But the long-term damage that they are causing because of their short-term actions is something that is very hard for the politicians to understand. So the gold standard brings a discipline to the people, and hence it is good for every country to go on the gold standard. If you look at the period 1789 to 1971, it is not that the people didn't want free stuff. People always want free stuff. But a gold standard actually prevents the US politicians from doing things that they can't actually tax the people for. So the only money that they can give out is what they explicitly tax. They can't print and give out the money. So that discipline is brought about only by gold standard, and hence it's actually good for all countries to go on the gold standard.
And that's a bearing of political cost, and I don't think US is ready to pay the political cost, because once in my definition, sir, economics means managing people well. So if you're not managing people well, then it will be go out and out, and it's very, very difficult to go back to those harsh decisions which Argentina has taken, because before taking hard decision, you have to go for the rust. So I don't think US can do this. It's a very tough decision for any country to anger your people and give them very harsh life. So that's a difficult thing. तो बहुत मुश्किल होता है दोस्तों ये कि ये कितना harsh decision आप ले, and you have to stop the freebies.
No, what will happen is the US will be forced to go back to the gold standard. They will not go back to it voluntarily, but because some other countries, say for example China, goes on the gold standard, okay, their currency will appreciate so much faster, and that could become the reserve asset. Or actually, gold can become the reserve asset for all central banks all around the world, at which point US will have no choice but to go back on the gold standard. So the choice of going back to the gold standard, it will not be a voluntary one. It will be a choice imposed by the free markets on the US government.
Okay. So, Shan sir, can we assume this for the time being, for the transitory period, gold will become the reserve currency?
No, the history of money is that gold has always been money for the last 5,000 years, excepting for the last 50 years from 1971. So gold is going to go back to its going to go back to its rightful status as money over the next 4 to 5 year period, and it's going to stay that way.
Okay, so now it's very good time to understand the brief history of money and currency, sir. Please explain,
right.
Sir.
Yeah. So, okay. So this is a brief history of money as I see it as. Now, 8000 BC, like, is when we actually started agriculture, right? Till we started agriculture, we didn't have a surplus. It is only when you have a surplus you can exchange, trade it with other goods and services. So 8000 BC is when we started this barter system, wherein we directly exchange goods and services for something else. Now, this barter system had its deficiencies, right? And in particular, it's called the double coincidence of wants, which is if you want to sell some particular product A and then get B, you have to find another person who will accept A, like in exchange for that particular product, right? So a barter was a very cumbersome system, but it was useful nevertheless. So what we did was that we shifted to an indirect system of exchange, which is, whatever we want to buy or sell, we would use an intermediary good to conduct the transaction in. And the first of these things that we used as this medium of exchange that later came to be known as money was actually wheat and barley. So people would accept wheat in exchange for what they wanted to buy or sell, knowing that others will also readily accept it because it was a very widely desired commodity. So wheat and barley was the first medium of exchange, and this was between 5000 to 4000 BC. For about 1000 years, wheat served the purpose of money. Now, if you can go back and look at the some of the old paintings in Egypt, you can see paintings where cows and goats are actually purchased using wheats, like in bags. So these are clear signs that wheat was used as money. Now, around 4000 BC, we actually shifted to iron and copper from wheat. And the reasons why we shifted was that iron and copper was more durable as compared to wheat. Wheat would rot in 6 months' time, 12 months' time. So, like, instead of using something that is not durable, we shifted to iron and copper. And from 4000 BC to about 2800 BC, iron and copper was the primary forms of money. Now, 2800 BC, like, is when we started using gold and silver as money. So from 2800 BC up till 1971, almost for a period of about 5000 years, we have been using gold. We have been using gold as money. And I think about 600 BC, like, is when we had started coins as gold. So the gold itself has kind of evolved, and we started using currencies, which are government tokens that are claims or representations on gold and silver. Say, for example, the British pound, that was the first national currency to be issued. And the name pound sterling itself came because 1 pound sterling represented 1 pound of sterling silver by weight. So the pound sterling literally meant 1 pound of silver. So each of these national currencies represented a specific claim on gold or silver. Say, for example, when the dollar was introduced, it was defined as 1/20th of an ounce of gold. Similarly, all major currencies represented a fixed claim on gold or silver. And that was the case till 1971, which is the point when we moved away from a gold standard onto this completely unbacked fiat currency system, or the paper currency system that we have today. So this is the history of money and currency. People today use the word money and currency interchangeably. These two are very, very different things from an economic perspective. Money is something that's only gold and silver that actually retains its purchasing power and is a store of value. Now, people say it's a store of value. What is a value that is stored in the form of gold and silver? That comes from its metallic properties, which is that it is extremely conductive, very divisible, very malleable, and it does not corrode at all. these are the values that is stored in gold and silver, and hence these are money. Now, if you look at a piece of paper, there is no value that it stores, right? So, the piece of paper cannot be it can't be considered as money. And all these currencies have value only when it's backed by money and is convertible to money. So, money and currency are two different things. Money is just gold and silver. Currency gets its value when it has a specific claim on money.
ट्रू सर. जो रुपया शब्द है, रूपी जिसको हम लोग बोलते हैं, रुपया शब्द आया है रूपक से, और रूपक शब्द का मतलब होता है चांदी. रूपक मीन्स सिल्वर. सो वो वहीं से ड्राइव हो गया है, इसीलिए रियल मनी मीन्स गोल्ड एंड सिल्वर. और उसके बाद हम फिएट करेंसी, पेपर करेंसी में आए हैं, व्हिच हैज शुड हैव बैकिंग ऑफ रुपी एंड गोल्ड एंड सिल्वर. या यस सर.
In fact, the rupee, if you go back hundreds of years, rupee was defined as 11.3 grams of silver. Correct. So rupee was a claim on silver.
Yes. So what we understood, the rupee, whatever currency is, fiat currency, dollar, rupee, yen, whatever it is, it should be backed by real money, which is in scarcity. And if it is backed, it is pegged, then you have a natural control to create new currency, and that will not create the inflation. क्योंकि जब भी आप अनलिमिटेड करेंसी प्रिंट कर रहे हैं किसी भी देश में, तो आप इन्फ्लेशन क्रिएट कर रहे हैं, क्योंकि जो प्रोडक्शन है उसको बैक नहीं कर रहा है, तो आपको करेंसी रिस्ट्रिक्ट करनी है. करेंसी रिस्ट्रिक्ट करने के लिए आपको किसी चीज से उसको पेक करना पड़ेगा. तो सर ये तो हमने समझा कि बेसिक्स क्या है मनी सप्लाई का, मनी का, और उससे पहले हमने आपकी बुक का प्रेडिक्शन समझा. अब कुछ बहुत ही रेलेवेंट क्वेश्चन जो इस समय लोगों के मन में चल रहे हैं. एक तो मुझे एक्सप्लेन करिए, जो अभी पीछे ये गोल्ड सिल्वर में भयानक गिरावट आई, बहुत तेज हुआ है, इज देयर अ रियल रीजन और इट वाज जस्ट एन स्पेकुलेटिव एक्टिविटीज?
No, I would have to talk almost about a conspiracy theory. Okay, but it's too much of a coincidence what happened about 10 days back. On a Thursday evening, this is US time, okay, there was a huge short sale, or like what is technically called as a naked short sale that happened in the futures market. Okay, that caused the price of gold and silver to go down substantially. Okay, then Friday morning, the US government makes an announcement about the Federal Reserve Governor. Up to that particular point in time, there are two people running. Okay, one was a bad choice and the other was a very bad choice. Okay, so people were thinking that he was going to go for the very bad choice. And then suddenly Trump came and said, no, I'm not going to go for the very bad choice. I'm going to go for the bad choice. And that is somehow seen as a way to control inflation. There is no way the US government can control inflation. Okay, but this was kind of interpreted by the media to say that they are not going to cut rates, and they're not going to do QE, etc., etc. And again, they push the price of gold and silver down substantially. But see, this is an event that they have done at least 5-10 times over the last 20 years, if you ask me. And each time they do that, the price of gold and silver will stay substantially low for at least a 3 to 6 month period. But this time, if you see, it has taken less than a week to bounce back to above 5,000. And this shows a strong, extremely strong physical demand that is happening in the Asian markets. So they are going to find it very, very extremely difficult to keep the price of gold and silver suppressed for an extended period of time. But having said that, this is going to be a very, very extremely volatile market. Please expect at least 15-20% downslides happening on a regular basis. It's almost impossible to predict as to when it's going to happen. And as in when it happens, you can be guaranteed that people in the futures market are actually going to lose their shirts. So this is a point that I made earlier also. Futures market is not a game for the retail people. Okay, just leave it to the experts. And as far as the retail people are concerned, okay, they should stick themselves either to the ETFs or to physical gold and silver.
आप सही कह रहे हैं शान सर कि जो जैसे ही मिस्टर वॉर्स का नाम अनाउंस हुआ कि वो फेडरल चेयरमैन बनेंगे गवर्नमेंट, उसके बाद से एक अलग तरह की स्टोरी चलने लगी कि ये तो बहुत पहले गवर्नर रह चुके हैं, ये बिल्कुल वैसे नहीं है, देखना डॉलर बहुत स्ट्रांग हो जाएगा, गोल्ड सिल्वर भी हो जाएगा. ऑल ऑफ सडन पूरी दुनिया को ऐसा लगा कि पता नहीं गोल्ड सिल्वर में क्या हो जाएगा, और वो करेक्शन आया और उसके बाद अब वो स्टेबल होने की कोशिश कर रहा है. माय क्वेश्चन इज कि किसी के पास मैजिक बैंड नहीं है कि जो आपके ऊपर वो $38-40 ट्रिलियन का जो लोन है डेट टू जीडीपी, वो पहुंच रहा है आपकी जीडीपी से ज्यादा, उसको आपके नाम से वो केवल खत्म हो जाएगा. दैट्स नॉट अ जोक, इट्स अ
Yeah.
रियल डेट. You cannot
Right.
evaporate one day. So you
Correct.
have to do something, and whatever you do, you will do mistake.
Right.
Now you're in a
True.
trap situation.
And assume you get God to take over this position as a Federal Reserve Governor. That is
Yeah.
the best possible scenario. Okay, then
Yes.
they would go back to the gold standard, and the price of gold will be $24,000 an ounce. So whatever be the scenario, you're going to get a substantially higher price of gold. I can't think of any scenario like in which the price of gold is going to stay low.
That's very very interesting. कि अगर गॉड को भी हम कंसीडर करें दिस बेस्ट पॉसिबल ऑप्शन, तो वो भी कहेंगे हाँ गोल्ड स्टैंडर्ड में ही जाना चाहिए, और उस सिनेरियो में $25,000 पर आउंस के हिसाब से उसकी पैकिंग करनी पड़ेगी, तभी जाके बात बनेगी. सो लॉन्ग टर्म ट्रेजेक्ट्री इज अपवर्ड. फ्यूचर में ऊपर नीचे होता रहेगा, वो एक्सपर्ट के लिए छोड़ दीजिए, आप उसमें कोशिश मत करिए ज्यादा, अदरवाइज आपके लिए बहुत मुश्किल हो जाएगी, जो अभी हुई होगी जब 30% गिरे. एंड द सिमिलर केस फॉर द सिल्वर आल्सो सर.
Yeah, so if you see the historical ratio between gold and silver, it's been 15:1. Okay, which is you can get 15 ounces of silver for 1 ounce of gold, and that is because that is also approximately the ratio in which it existed in the Earth's crust, and hence you got this ratio 15:1. And if you see the properties of gold and silver, they are actually very very similar, and hence the use case also was very similar. Just that gold became a superior form of money, like as compared to silver. Okay, but we will go back to this ratio 15:1. And as and when I say a gold standard, we always had a bimetallic standard in which both gold and silver circulated as money at the same point in time. Right, silver was used by the common people, and actually gold was actually used for the larger transactions. Say, for example, if you want to buy a house, you will use gold, and for your daily transactions, you will use silver. Right. So that's how we actually use gold and silver, and we will go back to some form of a bimetallic standard, and hence the price will, if not 15:1, at least 20:1, right? And at this particular point in time, I think this ratio is something like 60:1 or something like that. So silver is going to be amongst a few assets that is going to outperform gold over the next 3-4 years.
Right, so let me share one experience of my personal life. When I started my career in 98, 99, I think gold was 3,000 or 205,000 rupees per 10 gram.
Mm-hmm.
Now it is 1.5 lakh rupees per 10 grams.
Yeah.
This is the real money. दोस्तों, इसके बीच में हमने बहुत सारे मार्केट में अपर सर्किट, लोअर सर्किट और 10% की जीडीपी, 5% की जीडीपी, कोविड, एवरीथिंग वी हैव सीन इन आवर लाइफ टाइम in just last 30 years, but gold consistency is unmatched. मैं अपनी लाइफ की बता रहा हूँ कि 2,500 से 1.5 लाख मैंने देख लिए हैं. So the real money is real money. There is no question about it. So gold and silver we understood very well. और ये जो किताब आपके सामने कवर दिख रहा है फ्रंट एंड बैक, ये शान सर की लिखी हुई किताब है, R.I.P. U.S.D 1971 to 22X. मेरी रिकमेंडेशन है कि इस किताब को आपको जरूर पढ़ना चाहिए, क्योंकि ऐसे आइडियाज, ऐसी चीजें आपको स्टेप बैक करके कुछ नया सीखने के लिए एक अलग थिंकिंग का मॉडल देते हैं. आपको सुन के बहुत सारे फंड मैनेजर्स मिलेंगे मुंबई दिल्ली के, जो आपको बताएंगे नहीं नहीं गोल्ड में तो कोई वैल्यू नहीं, इसमें तो क्या है, कुछ रियल वैल्यू है ही नहीं, ये तो बढ़ती नहीं, इसकी फंडामेंटल रिसर्च नहीं है. आई कंप्लीटली डिसएग्री, क्योंकि आप अपनी पर्सनल लाइफ से एक्सपीरियंस करिए और फिर फंड मैनेजर से बात करिए कि गोल्ड की वैल्यू क्या है, दैट इज द रियल मनी. तो ये थॉट प्रोसेस को समझने के लिए आई रिकमेंड कि आप इस किताब को जरूर पढ़ें, खरीदिए और पढ़िए, क्योंकि ऐसी चीजें आपको जरूर समझनी चाहिए कि दुनिया में हो क्या रहा है, ट्रम्प क्या कर रहे हैं, भारत में क्या हो रहा है, अर्जेंटीना में क्या हो रहा है. अर्जेंटीना इज वेरी गुड केस स्टडी. समटाइम्स मैं इस पर एक पूरा शो ही करूंगा, क्योंकि वो बहुत तेजी से एक डिफरेंट ट्रेजेक्ट में बदल रहा है. लेकिन अभी तो हम गोल्ड सिल्वर की बात कर रहे हैं, शान सर हमने समझा. एक बार हम और कोशिश करेंगे, इसके बाद फिर एक बार बैठेंगे शान सर के साथ, तो एक बड़ा पिक्चर जो है दुनिया की, अदर देन गोल्ड एंड सिल्वर, वहां क्या हो रहा है उसको भी समझने की कोशिश करेंगे. तो शान सर, एनीथिंग ऐड, यू वांट टू ऐड समथिंग?
Yeah, just that it's going to be an extremely difficult time for the next 5-10 years. As and when I said that gold and silver prices are going to go up, it actually means that fall in the value of the currencies. So all prices are going to go up, milk prices are going to go up, egg prices are going to go up, and your salary is not going to keep pace with the price inflation in the years ahead. So we are going to witness a substantial fall in the standards of living of most people across the world. So this is a world that we should be prepared for, and we should move towards having a higher level of savings within the level of families, and wherever possible, we should try to keep our savings in terms of gold and silver, because these will maintain your purchasing power in the years ahead.
Sir, do you also see a higher trajectory for soft commodities?
No, I think almost all commodities will lag gold and silver. Okay, this will do better than the national currencies. Okay, but it's not going to outperform gold and silver. See, gold and silver are actually money for a reason. And by definition, money retains its purchasing power against a basket of commodities. So all the commodities will go up, but not as much as gold and silver.
And dollar would not be a global reserve currency.
No, we'll go back to gold as a reserve asset. I don't think we are going back to, say, from the US dollar to RMB or something like that. We will go back to gold as a reserve asset, and that has been the case for 5,000 years up till 1971. I think the last 50 years was a mistake, and we'll correct that mistake in the next 2-3 years. We are not going back to another national currency as a reserve asset. We will go back to gold as a reserve asset.
सो गोल्ड की ये कहानी है कि हम लोग फिर से गोल्ड की तरफ जाएंगे रिजर्व एसेट के लिए, और ये हमने रिसेंटली देखा कि सारे सेंट्रल बैंक्स इंक्लूडिंग इंडिया गोल्ड को खूब खूब खरीद रहे हैं. चाइना, पोलैंड, जर्मनी, सऊदी अरेबिया का सॉवरेन फंड तो सिल्वर भी खरीद रहा है. तो ये कुछ होने वाला है. आई होप कि इससे काफी आपको समझ में आया होगा. और दोबारा से मैं बता देता हूँ कि किसी भी तरीके की बाई सेल की रिकमेंडेशन नहीं है. इट इज जस्ट फॉर एनालिसिस, education, and for your understanding, for your better understanding how world is moving. तो शान सर, थैंक यू सो मच. और सचमुच ये बहुत एनलाइटनिंग सेशन था. और ऐसे मौके पे जब गोल्ड में एक करेक्शन आया ना, तो लोगों की ज्यादा दिलचस्पी है समझने की, सुनने की, व्हाट इज गोइंग टू हैपन. सो ये फिगर सुन के आप चौंक जाएंगे, लेकिन इसको ठंडे दिमाग से सोचिए, समझिए. और अगेन आई एम सेइंग कि ये किताब जरूर पढ़िए. तो मैंने तो सर के साथ समझ ली बहुत, और मैं खरीद के भी पढ़ूंगा, लेकिन आप भी पढ़िए, क्योंकि ये ऐसी चीजें आपको जरूर करनी चाहिए. थैंक यू सो मच सर. नेक्स्ट टाइम हम लोग बैठेंगे तो फिर और बिग पिक्चर को समझेंगे वर्ल्ड की, कि दुनिया में क्या होने वाला है इन टर्म्स ऑफ मैक्रो इकोनॉमिक्स. थैंक यू सो मच सर.
थैंक यू नीरज जी. बाय बाय.